My name is Richie and I'm with Remax Prestige. Today I'm sitting with Tony Chan from Crossroads Planning. He's a certified financial planner, and today we're going to talk a little bit about budgeting for the purchase of a home as well as retirement accounts towards a down payment of a house. So kind of jumping right in, what are some good strategies towards saving and budgeting for a home if somebody out there is looking to make that jump?
Great question, Richie. Buying a home is a great thing. So the first thing that a lot of people fail to do when they purchase home is to budget towards their monthly payments.
Okay.
A rule of thumb is that you want to save about 30%. Your monthly payment should be about 30% of your pre-tax dollars each month.
Okay, so you're talking 30% of the gross income versus the net income.
That's correct.
Okay, cool. So that's a pretty good indicator right there, pretty good practice right there, just to make sure people are not overextending themselves and can, afford the rest of their life.
That's correct.
Okay, perfect. Now, a lot of people who have regular W-2 jobs, their employers offer 401k programs, and those are great programs for saving towards retirement, but if somebody wants to buy a house today, are they able to use those funds towards that end?
Yeah, definitely. So there's three really common accounts out there. One is a 401k.
Cool.
You got your traditional IRA and your Roth IRA. For those W-2 employees that have 401ks, the first thing you want to do definitely is you want to put in the matching that your company is willing to offer.
Gotcha.
Now, when you're ready to buy your home, what you can do is some companies will actually allow you to borrow against your 401ks. The amount is either $50,000 or up to 50% of your account, whichever one comes first.
Gotcha. Now, is there a penalty with that, or any kind of fee or anything that's associated with withdrawing that money for that purpose?
Great question. There is fees associated with borrowing against your 401k. However, since you're borrowing against yourself, all those interests that you're paying back is going back to your account.
Gotcha. So, okay, perfect. So in the end, you come out ahead essentially.
Exactly.
Gotcha. Okay. Now you mentioned IRAs or IRAs. Just in case anybody isn't clear, what does that stand for exactly?
Traditional IRA means traditional individual retirement account.
Gotcha. Perfect. Now, as far as how those work with saving towards a down payment on a house, can you withdraw money from those as well, or is that money locked in there forever?
Definitely. For a first-time home purchase, you can borrow up to, not borrow, but you can withdraw up to $10,000 from either your traditional IRA or Roth IRA, or you can even combine the two, $5,000 from your traditional IRA or $5,000 from your Roth IRA.
Gotcha. And is there any penalties associated with that as well?
Not if you use it for your first home purchase.
Oh, perfect. Okay, great. So basically with the 401k, to recap, you can withdraw, depending on what your employer's rules are, up to about $50,000.
That's correct.
And then you pay back interest towards yourself.
Exactly.
Over time. And with the traditional IRA, that money you can pull out towards a first-time home purchase up to $10,000.
That's correct.
Perfect. So today, Tony and I talked a little bit about budgeting for a home and also how your retirement accounts can work towards saving for a down payment. I want to thank you for your time. And if people have additional questions, how can they get a hold of you?
Sure. You can go to my website at crossroads-planning.com.
Perfect. And we're going to have his information and links to his website in the description down below, so feel free to check those out in case you have any further questions. Tony, thanks for your time.
Thank you.
Thank you.
Remax Prestige Professional Consultants, representing your best interests.